right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. Thank you so much for taking the time out of your day to join me this morning and every morning at 9 a.m. Eastern Standard Time here on the YouTube channel. Glad to be with you on a Tuesday, February 28th, final day of the month, 2023. Let's go ahead and start around the horn. Dow futures up about 69 points. Been pretty volatile today, pretty choppy this morning, at least on futures. I was watching overnight and this morning, right around 4 a.m. I did see that we were red. The Dow was down about as much as 100 points. Then we were up as much as 100 points. So pretty choppy action for the end of the month. NASDAQ is up about 0.10%. S&P 500 futures are 39.94, still below 4,000, up 0.17%. The Russell is up 0.17% as well, 1902. We did close green yesterday on all stocks, so that was some nice price action, obviously. But we'll talk about seasonality here in a second. But we do know, as we talked about, that the end of the month for February is weak. So again, we expect a little more weakness today. We'll talk about some levels that we're watching. Crude oil is up 2.31% this morning, 77.42. Talked about crude oil on the podcast. Feel free to listen to that on Spotify. Again, was talking about crude may be the new big short, and I kind of go into a little more detail on it. But if you guys are interested in more of my thesis on crude oil moving forward, leave a comment in the comment section. Just put the words crude oil, and then I'll make sure to talk about it on the next pod. Gasoline futures up 2.47% at $2.64 a gallon. 1821 for gold futures, down 0.20%. Not a lot of fear out there if gold's down. Silver futures up 0.13%, 2082. And the reason I say about gold futures in that comment is the fact that the dollar is down as well, 104.51. We got above 105, that level, but my clear level for resistance was 105.68. We did not breach that. We got above at around 105.35, above that Fibonacci level around 105, let's just call it. And again, we rejected and came back down. So that did boost equities yesterday. 10-year Treasury yields 3.94%, up a little bit today. You can see kind of ranging now from about last Thursday. And I think last Thursday, if my memory serves me right, we had a bond auction. I just want to say it's a 20-year bond auction. Pretty decent demand, not the strongest demand because yields were higher than the bid to cover and the implied yield. So again, not seeing tons of demand yet, at least in fixed income, as we could see as yields are rising. Cash is a position, obviously, especially in these uncertain times for most, in terms of the equity market. VIX futures are down 0.24% this morning. 2090 is the spot. Dollar yen 136.61. That's up 39 pips. Thank you, dollar. 106.33. We talked about that. Euro dollar correlation with S&P many times. Again, so if the euro dollar is up, more than likely the S&P will be up, since we have that tight correlation with the dollar, or what we call an inverse correlation. Pound dollar 121.28. That's up 66 pips. 23,580 for Bitcoin, kind of hovering around. Still below that 25,000 level. We did breach it last week, but again, still kind of just hanging around there. Nothing really to get too excited about. Ethereum 1646. That's up 0.80%. In terms of contracts. So there you go, around the horn. I want to go ahead and start a little new this time. Let's just start going over the headlines overnight. This is our Twitter account. It is free. It is verified. Obviously, we are Twitter Blue members, so don't get it confused with anyone else's. That's right there. That's the blue check mark. Let's go over some of the headlines and we'll answer some questions. This is the ones that stood out to me this morning. U.S. goods trade balance came in worse than expected, negative 91.5 billion. For January versus the 89.67 billion. We did fall on ES as I was watching the chart, right around 404 to around 39.90. So that was around about a 14 handle move just on that note, on that report. Wholesale inventories in January, negative 0.4%. So that's still showing some demand. There was an expectation that we'd have wholesale buildup in goods, which would bring prices down. So that's probably the big thing that stood out in terms of the stock market, as we're in a place now that we have pretty much insatiable demand for services. But when it comes to goods, it's actually fallen a little bit. So again, you can see the names, the consumer packaged goods had not the best conference calls, not the best earnings reports, obviously. But in terms of wholesale inventories, being at a negative is showing implied scarcity, obviously, in goods and services, which in turn brings prices up. So that's a concern, obviously, moving forward as we do have the Fed meeting in March. And speaking of which, odds for a 50 basis point hike at the March FOMC meeting are at 23.3% this morning, which is down a few percentage points from when they were a few days ago. So again, with that data, we understand that 25 basis points would be the difference between 100 minus 2333. So that'll get us to around a 77% implied move, or implied statistical analysis or guess, educated guess, that we're going to get a 25 basis point hike. If you guys remember back last year in December, I said that we would get a hike and pause. I was wrong for that. I thought we would get that pause, but we didn't. Well, not officially yet. Looks like 25 basis points is baked into the market, so it's not exactly news to everybody, but a 50 basis point would. So again, we're going to keep that an eye. The good news, at least for the policy doves, those who expect or want lower rates, the good news is that we don't have a non-farm payroll report this week. So again, no hot jobs numbers going to come in and kind of screw around with the Fed's thinking that a 50 basis point hike is in the cards. So that'll pretty much cement the fact that since that'll be next week, the Fed will be on a blackout period, meaning there's going to be no more speakers. So they can't really comment on the jobs number. And it seems that that will probably be implied in regardless of the jobs figure, unless it's something extremely, extremely high, maybe within the 500,000 range or so in added jobs. And if the employment rate starts really cracking to around the 3.2%, maybe a 3 handle or less than a 3 handle, mind you. So again, I do expect a 25 basis point hike. If anything changes, we'll let you know. Twilio snaps up $10 million worth of stock. So again, that stock was up this morning. David Solomon, CEO of Goldman, says inflation is going to be, quote, stickier. Tesla and Mexico to announce a deal for a factory, says official. So Tesla is up pre-market last I checked. Chevron raises buyback guidance 10 to 20 billion year prior. Sees share buyback of 17.5 billion. Expects free cash flow, that means FCF, annual growth above 10% at $60 Brent at Investor Day. So Chevron's probably going to get a boost this morning. I have not checked it this morning. We can go ahead and move this headline here, and we'll bring up CVX. And CVX did get a boost of around, we'll call it $2 and change a share on that buyback news. I kind of talked about that in terms of the crude oil thesis, that being the next big short. Again, more buybacks, more shareholder-friendly actions by the board by spending that cash flow instead of expansion, since again, you can't really expand much into crude oil in terms of where we know where drilling restrictions are. So again, at CVX and these energy companies are kind of stuck in a tough place in terms of looking for growth, and yet we hit peak oil, at least in terms of the spike in oil prices back last year. So now we're going to compare this year's financial documents or financial statements or growth or revenue, EPS and such, compared to a record banner year last year for these energy companies. It's kind of putting tech in the same place where tech was in 2022 when they had a stellar 2 years, 2021 and 2020, due to the COVID lockdowns. Meta reportedly Advantage Plus AI tool significantly boosting performance of advertising campaigns following Apple's privacy changes implemented in 2021. Meta is a stock that I've been watching. I'm watching a level to break around 167.25. If that breaks, there is a gap fill that we have talked about around 153. So again, I'm just going to be waiting for that level. And let me see if I had the other headline here. Okay, this one here. March and April historically are the two better months for the S&P 500. So again, we talked about that bullish seasonality with a pre-election year. Even including the 12% drop in 2020, March is still up on average the past 10 years. Lastly, these 2 months are even better than pre-election years. So let's take a look at that chart. And again, this is kind of the thesis that we're expecting. That again, we're going to have a weak end of February. March is going to be bullish. April is going to be bullish. May should be kind of flat with June. July, we get a little bit of a boost. August, we'll see if we get flat or not. September being weaker. October, November, we do know that November, historically speaking, is very strong. October, you throw in 1987 in there, 2008, it gets a little wacky. So again, March and April, seasonally speaking, is going to be good for housing. Obviously, we know with real estate, springtime is the best time. And then, of course, springtime for the equities market is a strong time as well. So again, do not be surprised in regards to March being strong. So those are your headlines this morning on Twitter that I tweeted. Feel free to follow at any time. It is free for everybody at GAR Capital. Good morning, everybody. Let's talk about it. NVIDIA puts are looking good this morning. JJ, you are right. Let's go ahead and talk about it. And this was a tough one. Kind of a situation where last week we had with SPY puts, where we actually got the boost throughout the day. We had a short time frame due to Tuesday's expiry, which was today's expiry, but we got out of those on Friday. We had the PCE number as well. So let's go ahead and take a look at NVIDIA, at least here, and this is where we got in. We have a double top on the 1 hour chart. Let's go and bring up the daily here. Again, you do have that upside gap to fill, so there is some risk on this trade, obviously, if we get like a big boost. But what stood out to me here was really this double top here, and then you had the RSI divergence, where the RSI was actually going into a downward slope. So again, looking at NVIDIA here, I also drew this nice little clean trend line that we broke down slightly, but out of range. So again, this upside move isn't really a big deal since we're kind of just chopping around. What really stood out here, let's bring up the daily. And again, we're just consolidating at this point with no real news, with not much baked in as well. All we're expecting here is to break below 230, not even to fill that gap, because that's going to be a continuation gap. I put a video on that on Instagram as well. So again, this 211.04 NVIDIA gap fill will be filled down the line. Don't expect that to be filled overnight as well. Same thing with Meta. You know, those big gaps, again, those are continuation gaps in terms of direction. So again, they're going to take a little longer for that to fill. So again, I wouldn't want to get trapped thinking that you're going to get to 211 this week, because that's just not going to happen. I think that 230 does breach, especially with the weakness of today, and we'll see if we can catch those NVIDIA puts, JJ. Is SPY bumping up against resistance? What is the next support at? This is from JD. Let's see SPY here. All right, let's go and take a look at SPY this morning, and really what you're getting for the past past week has just been chop, at least on SPY. Again, we have trade puts, so well done to the team too. But again, we have to kind of expand it a little bit here. Let's take a look at the daily chart, and we do have a couple of gaps to fill to the upside. This is the gap here around 408.17. We did bounce pretty closely to that 200. We are above that trend line here, the most famous trend line that we've had in 2022. The key level here right now is the 50-day moving average. More than likely, we may breach that today. Again, with the seasonally weaker February, end of the month of February is usually weak. Let's say if the bulls do defend that 50-day, we do have the March seasonality as well. That's when we starts getting a little interesting for the upside. We can probably catch some cheap calls. But again, I would really like to see if we break 402.01. That is your peak right around on Thursday, and that's when we started falling a little bit. So again, if we break above 402, that's when I want to start looking at this gap fill here on the 1 hour chart of around 407, and that would be my target. That's about a $5 move to the upside. Maybe if we don't get it this week in terms of the 402, we can play into next week as well, as we have non-farm payroll and a couple of other big news items out there. So let's go and take a look at QQQ. But in terms of resistance, JD, again, the big resistance now is 402. We're really just sticking to this consolidation pattern here. As long as we stay above the trend line for now and that 50-day on the daily, then SPY is going to be just fine, just chopping around. A tough one to trade, mind you. And again, Qs is kind of the same deal. I put an alert around 296.80, and the reason I didn't put it at the Tuesday highs was due to this double top that we've had back on the daily. And again, 1, 2. Again, that was our support. It breached that support. We played puts, not on Qs exactly, but we did play puts on stocks. And then we kind of have been consolidating here for about 5 days. And again, now your previous support, which previously was resistance, is your resistance again. So again, we want to breach that, 296.80. Then we can take a look at possibly the 300 to the 302 range of calls on Qs, but we need that boost. And what's going to help us do that is really the dollar. The dollar has to come back down a little bit. And if the dollar does, then again, we'll get some bullish action. But right now, we are rejecting 105.68. Once we start breaking below 104, I think that's when equities really start kicking in, breaking that 402 level on SPY. But we need around 104, maybe to 103.53, let's say. That's your 20-day moving average. And again, what have we talked about the 20-day? The 20-day moving average is our big momentum indicator, at least on the daily chart. Why? Because it's the same 20-day stretch that we use on the 1 hour, which we use to base our entry on our trades. So always have that in the back of your head, the 20-day on the daily. Let's say good morning. Good morning. Jack was asking about QQQ. I went over that. So that's where we are this morning. We went over some headlines. We went over my NVIDIA trade this morning. So let's see what we get moving forward, and we'll go from there. I will catch you guys tomorrow for the morning note. Let's make it a great Tuesday. Happy end of the month, and we'll see you in March. Cheers, guys.